Hello everyone, good afternoon and welcome to today's Trading the US Open live here with the live trade room. And today now is Monday the 17th of September. So without further ado then, if I could firstly draw your attention to our risk warning, please of course do familiarize yourselves with the risks involved in trading these markets. Okay, so without further ado then, let us, before we get into trading and looking for the opportunities where we look to identify high probability trading opportunities, where we go through a process for us to execute trades with a high degree of consistency and discipline, and then when it comes to managing the trades, we look to mitigate risk as quickly as possible and look to let our winners run. So that's the principle behind our approach during this session with technical traders. So we're looking to execute trades in these markets on a technical platform. We use support and resistance and our understanding of Japanese candlesticks to do so, and with one aim, and that is to book in consistent returns on a regular basis. Okay, so so let's then start with our Forex factory, and I'll just bring it up on screen. So it's important before any trader trades the financial markets for them to have an understanding of the news flow and see if there's any news events that could adversely impact them when they're in these markets. And the only bit of news we've had today is the fact that the final CPI figure and the core CPI figure came in for the Eurozone exactly on target, so 2%, and the forecast for the core CPI year on year is 1%. So so no major deviation there as far as that's concerned. Now projecting ahead, really, we don't have an awful lot to work with this afternoon. We do have obviously foreign security purchases impacting the Canadian dollar, medium impact depending on the deviation. We're not likely to see a massive deviation in these numbers. And also for the US, the Empire State Manufacturing Index as well. So we've got these news events which we can of course have make reference to, but as you can see, nothing of any major concern for us outside of the major macroeconomic events, global trade talks, geopolitical concerns, Brexit negotiations, if we're talking about OPEC and non-OPEC oil producing countries as well, and some of the positions that are in the pipeline as far as that. So lots of global macro events going on behind sort of the day-to-day and hour-to-hour news events. So with all of this in mind then, let's have a look and see what's going on with these markets. And as you can see, we're getting a bit of volatility. We do have this overriding downward sort of pressure onto the euro dollar, and Friday's market was a good indication of that. We got a really strongly defined rejection of these highs on Friday, and it obviously makes trading conditions a little bit more on a difficult side as a result of that. But what we're seeing is today a little bit of a reversal off those lows. It soon became apparent that there was an opportunity above the 1637. We had a little extension higher, and we were sort of looking for a pullback to support and resistance, which obviously never really arrived, and just continued to strengthen even fairly recently now as well. So we're now at the level which is interesting for us to look at on a daily time frame, and it'll be interesting to see how this market behaves around these just ever so marginal higher levels in this market. The levels we discussed this morning for the euro dollar would be a concerted break below the 1611 with potentially a nice push down to the 1526, or actually a concerted break above the weekly high at this level would be a little bit of a game changer for the euro dollar. Obviously we're just trading within this 3-day range, up, down and back up again, so not overly surprised by that, but this can lend itself to a couple of opportunities in a couple of other markets. So let's fly through these for now. We're getting the pound very, very close to breaking out to its highs, the 31.43 level. We've clearly benefited from a relatively strong structural failure. And we're looking like these prices are continuing higher. Now, what we do have is a weekly high at the 31.43, and a breakout above that could give us a good opportunity. There's no doubt that some weakness is creeping into the US dollar over the course of the morning session. So with that in mind, we can look at these levels as the session unfolds. Not much is happening regarding the pound yen, so both are as weak as each other right now, effectively, and we're finally getting this little move down at these levels in the dollar Swiss. So we're breaking new weekly lows, which is obviously what we'd like to see. So we're getting a nice extension on that. So we'll definitely come back to the dollar Swiss. The dollar CAD looks like it's going to certainly squeeze down to these lows. Maybe we've got a couple of higher probability opportunities elsewhere, so that's our thinking behind this one. We wanted to keep an eye on the Aussie dollar just in case some strength started to come back in to the US dollar, but what we've seen is fairly sort of tight range bound price action, but now we've experienced 3 structural failures to the upside on each of these occasions, so less likely to get that turnaround move lower. However, it must be acknowledged we are running into these levels of resistance, and that may need to be taken into account as well. New Zealand dollar strengthening against this weakening US dollar, as you can see, so we're not quite at the levels in which we'd like to we'd feel more secure in terms of taking these trades. Euro pound next is just tagging around these lows down here, as you can see. What we would like to see is a break of the 88.76 to the downside, and if that occurs, then that would be the second major structural break to the downside. And that will be the second opportunity in there to see if we get this price squeezing lower. So we can certainly refer back to the euro pound below that level, so we're not too far away from it. The euro yen next, similar situation to the euro dollar. As you can see, a little bit of strengthening. We've completely clawed back a lot of the weakness that creeped into the euro dollar on Friday. Similar situation for the euro yen. We're seeing these prices squeeze up to these highs, but we kind of want to clear these levels, not necessarily buy just prior to those levels. So we do want to see a break above the 131.11, and we do have this descending level that could provide some resistance for us in some of these markets. The pound yen is now finally breaking above this weekly level, and this is a weekly high in here at the 147.01 level, so we'll definitely come back to this. So a couple of opportunities are beginning to unfold. The potential for with the dollar weakening for the gold market to strengthen slightly. We were talking about this earlier, and we're still kind of in between lower highs to the downside and then potentially higher lows. So there's a slightly mixed picture, but it's not to suggest that it wouldn't be a good opportunity for this market to squeeze up to the 1207. So this could suggest a couple of opportunities for us as well. So we'll have a look at this market. Going on to the crude oil market, we're still firmly contained within Friday's range. Same situation for the UK oil, so we can keep an eye on that from a distance. Again, we're contained within Friday's range with the S&P. We were initially looking for this to roll over to the downside, but we weren't able to see that follow through in this trade. The Dow Jones just consolidating around these previous highs. The US 100 is potentially has the potential to squeeze down and maybe just start attacking these lows again. The caveat to that is we need to see some negativity starting to creep in to the US equities if we possibly can. FTSE, just we've gapped up lower and we're slightly in this period of indecision as things stand. And looking a little bit on the bullish side, but we do have a weekly highs there of 33.55. So a couple more potential opportunities in the pipeline. So let's go ahead and look at these one at a time. So we can look at the gold market on the bottom right hand corner of your screen. Pound yen, top right. So top right, and then looking at some of these other markets. What we'll do is we'll put the euro pound just in the bottom left hand corner, and we'll make a few references to it. Now we've got a number of dollar related markets, so I'm going to kind of put all of these three on the top left hand corner. So we'll put the Aussie dollar, the pound dollar, and the dollar Swiss. So these are the markets where there's significant amount of volatility just creeping into them. So this is effectively our trade plan. We're kind of looking at a couple of opportunities in a number of different capacities. So we're looking at the pound yen, and we'll have a look at these in turn. We're currently getting that pullback on a 15-minute time frame, and if it comes back to the 147.01 and we get a turnaround trade, that could be useful for us. The gold market, we're looking for potential for some strength to start to kick in, and let's see if we get a close above the 11.9875, just up at these highs up here. Regarding the euro pound, you can see the choppy range-bound nature of a lot of the news events that were clearly a part of this price action. A lot of discussions last week regarding Brexit negotiations. We are currently hanging around these kind of lows, so we'll see if we get firstly a break of that. Then this could mean it's a market that's kind of worth us looking at in a little bit more detail and taking it just a little bit more seriously. We'll start with the pound. With the pound dollar, what we would like to see is this market break above the 31.43, and let's see if this has the potential to do that. It would be a significant double top if that's not the case. So we've had a morning full of dollar weakness, and it'll be interesting to see now what is next for the US dollar once we get those American traders being added to the mix here. Pound dollar, so we can have a look in that. Let's have a look at the Aussie dollar. The problem with the Aussie dollar is this is a level of confirmed potential resistance. So what we're seeing is this market bounce back to this level and has the potential to strengthen to the downside. The levels we're kind of looking at is coinciding with these kind of ranges in here. So from a price action perspective, looking at support and resistance to the upside and to the downside, it potentially stacks up. What we don't want to be doing is necessarily selling this raw level. We'd like to see a structural failure to the downside if we can get into that. And then finally, the dollar Swiss. So let's see if we get a bit of a pullback. We did see a little bit of a one. and this represents a significant sort of move off these lows. So let's see if we can capitalize on a bit of a pullback trade in that. The other pullback trade was the pound. No. Sorry, it was the pound yen, wasn't it? Okay, so this is effectively our trade plan, where we're looking for the euro pound potentially to break out below the 88.85 level. We'd like to sell so we're looking for an opportunity to maybe look to sell this market in and around this kind of level in here. We can buy the pound yen from these lows, and we've seen a bit of a rejection of these highs now as things stand. So let's see in the gold market if we do get this price breaking above what is the 11.99 level. See if we get that little push up to the 1200 level in this market. The pound yen, there's plenty of scope for this to squeeze really back down to the 147.01 and see if an opportunity exists then. So what's interesting about the pound dollar, to see if we get a break above the 31.43. It's very likely to support the pound yen trade. So the dollar and the yen are kind of equally weak. Okay, so the gold market is continuing to, or it's showing signs that it's looking like it's going to continue the move to the upside. We do have the close of this market in the next few minutes, so worth keeping an eye on. The euro pound potentially has we're very likely to see a little break in this market further lower. We're not too far off that level. Okay, so could be the case where we just look for those opportunities now. So with the pound dollar, a break above the 31.43. So if we get that break off, a break to the upside, and we get a nice little pullback, we look to get into that, hopefully around the 31.43 somewhere. Same situation for the euro pound. There might be an opportunity to get into this market around the 88.85. That's the entry. That's roughly the level that we would like to get into this market at. We're quite happy to look for an opportunity to buy the pound yen if we get a pullback to 147.01. And there's even an opportunity to just buy this little breakout to the upside if we get that opportunity there in the gold market. What we'll be looking to do is to sell this level if we get that opportunity. So we've got a few markets there that we can really look at for the session. Bit of a slow morning, a bit of a slow grinder across a lot of the dollar pairs. For starters, it was slowly looking like we were going to get a little bit of dollar weakness, and that's exactly what's happened. We've continued to retrace a lot of Friday's dollar strength move. So we're looking for opportunities off the back of that. Not that we're getting kind of extreme explosive moves. We're kind of getting a slow grinding market, which is fine, you know, as long as it's moving in the direction in which you want to trade them. Okay, so the pound yen is pulling back quite nicely to 147.01, hopefully pretty shortly. So the dollar Swiss, okay, so so this is the close of the 15-minute candlestick. So let's have a look at this across smaller time frames. Getting a nice strong pullback. So all of these are getting pretty close to potential moves. So we're getting a little break above. So let's see if we get a close now above the 11.99. This is a good reason to take note of in terms of if we get this little break above the 111.99, why don't we get in at this high? What we like to do from a consistency perspective is to look for the close above those levels, and occasionally that stops us from just getting in with these little breakout trades, especially if they pull back quite aggressively like that. It would imply to us that we need to sort of take our time a little bit more. So on an intraday basis, we can take note of these highs. Very likely to provide a little bit of resistance. We'd like the market to pull back if we could to the 96.34, but there's only sort of 4 or 5 pips difference between these levels, so not an awful lot when you think about it. So the gold market might give us our first opportunity to enter. Let's see if this candlestick now closes. So the pound dollar is squeezing up to the 31.43, so we're not too far away from that. We're getting a bit of a squeeze higher now in the pound yen. We didn't quite get the pullback to the level that we would have liked in the pound yen. So it's 147.21. So we would have really liked this market to pull back another 4 or 5 pips potentially. So let's see if that still happens. So we're getting a rejection of these highs now in the gold market. Okay, so let's continue to look at these trades. All we're really seeing now is just a little bit of a potential little mini structural failure to the downside. The euro pound, we still want this market to break beneath these levels. The pound yen, we would actually like this to sort of roll over if we possibly can down to this lower level. So that's the level we're looking for this market to take. The gold market, we're actually looking for an opportunity to buy this market. We are conscious of the potential for resistance coming in at the 1200 level. So we're only a few pips below that level now as things stand. Okay, so there's signs that there's a little bit of potential strength just beginning to creep in. We do have that strong resistance at 31.43. That's why we don't really want to be getting in at just these lower levels. So this close just below this level here is actually quite important, but we'll see if we get this rolling over to the downside now. So this now is interesting. So we've created a low, so the market is on its way down, and then all of a sudden now there's actually a structural failure to the upside. Okay, this is just a 1 minute time frame, but maybe this market wants to edge back to the weekly low. If so, just give it that kind of room. Looking at the gold market, now we're rejecting this little structural failure to the upside. See what we're looking to see for the dollar Swiss, and because these markets could obviously swing both ways, we could start seeing some strength come back in as well. We want to see a structural failure. So if we find a little bit of support in here, we kind of need to break this level, and then it's realistic to expect a little bit of a pullback. Alternatively, if it just extends lower and we get an attempt to make a new high in and around this level, then it creates a structural failure to the downside on this occasion. So there's potential for this market to swing literally both ways. We could swing lower beneath a certain setup, but we also have the potential to swing higher, at which point, not that we'd be looking to buy below the 96.34, we actually wouldn't, but it might be an opportunity to sell it from a slightly higher price. So just got to keep our options open regarding the dollar Swiss right now, and it's a similar situation really. We're just procrastinating around these highs up here, so close to the 31.43. We're only sort of 7 pips away from breaking that level. And the Aussie dollar is just continuing to strengthen against the US dollar. But as you can see, the last sort of hour, we've not really broken higher or lower just yet. So let's see if some more volatility comes into these markets. Now, the level that really becomes quite important to us in this level now is, let's just take this low in here, the 1197.92. And don't forget with the gold market that there is a strong biasness to the downside when we trade gold. If you're buying gold, which is potentially the suggestion, if the market conforms above the 111, the 1199 level, then you are taking a counter trend trade. So maybe just amend your risk accordingly, especially during these market conditions that we're currently trading. So there's a distinct lack of direction in some of these markets, but it doesn't mean to say that we can't sort of snipe and take a couple of opportunities. Let's have a look at the Aussie dollar on a smaller time frame. Okay. So we're seeing a bit of a spike lower now. It's a little bit of extreme volatility just kicked in, just a sharp snipe lower. Now we're gapping to the downside on the open of the next candlestick. You know, are we going to have some strength coming into the yen and the dollar again? Which the only thing that does is make these trading conditions a little bit more indecisive again. So I'm not sure what you guys think, but there is the feeling that a bit of strength may come back into the dollar, which obviously just muddies the waters a little bit for us. So there's this little band here between 96.30 and 96.31, and it should provide some resistance, but let's see if that's the case. Right. Okay, so look, we've still got this 31.43 for the British pound. We have a trade above 71.82, so we're only 3 pips away from that to the upside, which would mean a complete unwinding of this potential sell trade. The pound has the potential to squeeze higher. That would be certainly in keeping with our... no, it wouldn't. Excuse me. Sorry, the pound strengthening against the dollar. Yeah, sorry. Yeah, it would coincide with our buy trade in gold. So we'd be selling the US dollar, and that would mean it could give us an opportunity to buy the gold market as well. So sometimes trading where you have a big picture view across multi-markets, multi-asset classes is not a bad position to be in. So we do want to see the gold market break above 11.99, and we do want the pound to break above the 31.43, ideally the Aussie to break above the 71.82, and finally the so we're getting a bit of a turnaround now in the dollar is strengthening against the Swiss franc, coming back to this level, which is a weekly low, the 96.34. We're kind of at that level now. Bit of strength coming in, like dollar strength below 75, 71, 75. I'm sorry to say, but could give us an opportunity to actually sell the Aussie dollar to the downside. So we do need to be a little bit careful. Like this flush lower is a significant amount of sort of volatility. Let's see if we get follow through to the downside. So this is the strong pullback to the weekly low. Okay, so we're in the process of getting confirmation. Oh, look at these big moves now. Okay, so now let's look at these moves and see. So we're clearly getting some dollar weakness coming in. We're experiencing the pullbacks. I'll be interested to know probably what the reason for that sort of degree of volatility was about. We can focus on that afterwards. The pound yen is still below the 71.4721. So clearly some some significant developments kicking in. So we still have this level sitting in here. Looks like we're getting a little bit of a pullback in the gold market, so we might be able to get into some trades very shortly. I'm also looking at the pound yen. It would be worthwhile taking if we get a normal close above the 147.21 level. Might be worth getting into this. So we've got our close. So now we'll see if we get some momentum above the high, and if so, we'll get into this market. The gold market's kind of pulling back roughly to our level. So looking at the pound yen, so we just want to get a little tick higher in that. We already, if you're wondering about our risk management, we already know the amount of capital we're roughly going to. So I'm going to get into this market in here. Let me just zoom in a little bit. So yeah, we're risking about 17 pips in this trade. So on average, we risk about 15 pips per trade at a predetermined trade size, and this is kind of a 1% trade for us. So we've already got a strong handle on our risk management approach. Happy to get into this trade on this basis and just test this market and see if we get some continuation. Now we're getting a strong rejection of these levels. So we had a really strong impulse to the upside, very likely to get continuation. We're not quite getting the strong follow through that we would ordinarily like to trade. We're currently experiencing a bit of a pullback. Right, okay, so as you can see, some very choppy price action. So there's definitely a lot of indecision kicking in. It's quite erratic, isn't it? So let's just give these markets a little bit of room and see how we can negotiate them. So we had a really strong sort of pullback on this and a flash sort of move to the downside. So these are the levels that are now worth focusing on, because we've had our impulsive move to the upside and now we're getting quite an impulsive move to the downside. So to get into the long side on the Aussie dollar, we'd like this market to pull back just even further than these levels. So let's see if we can get a comprehensive understanding about some of these markets right now. So I wonder what these news events are. I'm gonna just see if there's any sort of more recent news events, just to see what may have caused just a bit of erratic price action by the looks of it. So we've got a really strong impulsive move in gold, followed by a pretty significant rejection, really, coming back to these levels of support. So are we going to see continuation? The dollar's strengthening a little bit now against the Swiss. There's a double top now in the Aussie. The dollar Swiss has just gapped to the upside and sold off a little bit. And the gold, it's currently now below the 11.99. Okay, guys, listen. I can actually see the time. Actually, we need to switch across to our live trade room to see if we can capitalize on a little bit of this volatility that's just entered this market. We might get a couple of good opportunities in the pipeline. Certainly a little bit strange sort of Nice explosive move higher, expectation for this market to continue, but instead we get a really strong rejection of this market, and now we're getting the rollover to the downside. So we're actually getting the dollar strengthening by the looks of it. So something probably has caused that level of liquidity to kick in and the markets to suddenly wake up. So what we'll do is we'll switch across while we're experiencing these pullbacks and see what opportunities may exist. So thank you very much for joining us, guys. If you would like to connect with us, feel free to do so through our YouTube channel. Just click the subscribe button, and of course give us a thumbs up or do subscribe to the channel, and you'll be notified. Click the bell icon, you'll be notified when we go live. Today, in fact, today's market's been quietly sort of drifting really off the back of quite a volatile end to last week. So hopefully there's signs of a little bit of volatility coming back in, and hopefully that will give us some really good tradable opportunities. Also, you can connect with us through Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen now. And thank you as always for joining us. So we will be switching across to the live trade room. Please do see the basic information below. You will see that there's a link there currently for you to join us on a 2-week free trial if you would like to access the copious numbers of live trade rooms available to you through the live trade room, because we think that's the only way in which traders are genuinely going to learn, is if you trade the markets live, and you can hopefully pick up the skills that are necessary to be consistently profitable in these markets as a result. So so thank you as always for joining us. Do take care, guys, and we'll speak to you soon. For everyone here, bye for now.